Good afternoon, everybody, and welcome to this edition of Ask the Experts for Tuesday, 13 September. My name is Capolingua. I'm the market analyst over at Think Markets Australia. It is a pleasure to be with you as we delve into the depths of your portfolio, kick over some rocks there, hopefully find some gems, polish them up. We'll keep those ones, we'll turf out the ones that are no good, and hopefully learn a lot in the process. Let us kick off, potentially, depending on the first question, with the charts. We've got Pilbara Minerals on screen. I might as well comment on that, and also hit my update button. It helps me make this point early in the session that what we're seeing here is my AMI broker platform. It's powered by Norgate data. Norgate give me an update on the hour, each hour at 20 minutes past. I haven't done one today, so we're going to see a new bar appear right there for Pilbara, right at the end. What an amazing candle that is as well. And then as we go through today's session, I'll click the update button. But if you're wondering what to do with Pilbara, for the people that have been listening to me long enough, you would already know. Looking at the candle as it stands right now, you would do nothing. You would absolutely hold on to this two hands, gripping it tightly, because there's nothing in the current candle, and certainly in this recent trend, to suggest that the uptrend is going to end anytime soon. Having said that, I'm not hedging my bets. You know how I feel about big round numbers, and $5 is one of the big ones, to be fair. So we are getting pretty close to that level. Will it get exactly to $5 and then reverse? Will it get close to $5 and reverse? I'm not sure if you want to play the game of getting it at $5 or getting out at $5. I think somewhere in that sort of, $4.90, even the high 480s, you're probably going to want to start to offload a few, and on the basis that it's just a round number and nothing else. For me, round numbers deserve a partial exit. I don't think you're throwing everything out here, but I think you do need to respect it. Often round numbers are increased in their importance if we did spend a lot of time at roughly half the round number, so around about 250 here. Oh, look, yes, there was a bit of trading there, but I don't think that's probably going to have too much of an impact in this particular example. Apart from that, look, absolute hold. Would I buy it here? Now, I can't buy Pilbara here, not because it's a wonderful company, not because there isn't an amazing trend on screen. What we're seeing on screen is the picture of demand or excess demand. It's not just demand. There's always demand around, but there's potentially supply to match or beat that demand. What we're seeing here is pure demand. Think about those words, pure demand, and just a supply side that is unwilling to participate at this moment. So the demand, the pure demand that's in the system, is having to pay higher and higher and higher prices, and the supply is not coming out. How will you know the supply is coming out for Pilbara Minerals, and therefore in addition to potentially that $5 round number, when it would be time potentially to sell some? Okay, well, the candles you need to look out for are not these candles here. You can see that we have in the past drawn those candles, and I'm expecting around here where we went 1/3 plus 1/3 plus 1/3 plus 1/3, looking at potential entry signals for a long trade on Pilbara. We drew these candles. What we're looking at now is the opposite of those that we may see around here, to tell us that supply is starting to impact the market, or impact on the prevailing demand, let's say. Okay, and the candles we're going to look for, I might actually use these and just copy and paste them, because that will be quicker and easier. But something like that, not something like that, like this, you know what I'm about to do. We're going to fill that in black, the black candle, or let me copy this and drag it over. I can't copy two things at once, so I'm going to do them separately, and we're going to have this shadow here, and it won't look like that, will it? It'll look like this. Well, could be white or black is less relevant. It's more the small body of the candle in relation to the long upper shadow. So if you see either of these candles in here, again, supply starting to impact the prevailing demand, I would suggest, given the run it's had, the distance it is from my short-term uptrend zone, which is my value zone, it's where I like to buy. I'm looking for signals just like these white candles in here. You can see them. Yep, close to the zone, in proximity to the zone as my buys. There's another batch of them there, but so far away now from that zone, and so close to the target, the reward risk is not there for a buy, but a hold with a view to potentially exiting some of that position very soon on Pilbara. I don't think I could have gone any more comprehensive on that. Just for completeness, let's look at the Thomson Reuters Refinitiv Icon valuation tool. For the people that have been with me long enough, you'll know it looks very different now. I think it looks very, very sexy indeed. I've changed a few of the colors, but I've also upgraded a bunch of the formulas as well behind the scenes. So it is whiz bang. If it wasn't whiz bang before, it is whiz double bang now. Looking at Pilbara Minerals, which is over here for the uninitiated eye. And then we've got the broker consensus over here. So we can see that there are 9 brokers currently covering Pilbara Minerals. We've got 2 at a strong buy, 3 at a buy, 3 at a hold, and 2 at a sell. Now that means it is extremely polarizing. There are brokers out there that can see the benefits, and there are brokers out there that are thinking it is wildly overvalued. Potentially, in terms of their price targets, maybe being reflected there in that their average target is 366, which is about 20% below the current price. Now, I will say that brokers tend to be a bit slow in sort of upgrading those targets. Okay, so maybe there are a few of the 9 here with lower targets that they may well have upgrades in the offing there. Okay, let us then look at the earnings per share coming up or now and coming up for Pilbara. So they have delivered their maiden profit. So you can see their years and years of investment and toil have become 17 cents per share there for Pilbara, giving it a current PE of 26.1 for FY22. But because of the earnings growth and substantial earnings growth as they ramp up production there, you can see going from 17.5 to 57.5, but then tailing off a little bit. Maybe some of the brokers are thinking that the lithium price is going to moderate somewhat, but once we get to 2026, picking back up again. Now, if we look at the compound annual growth rates, so comparing this number to this number and how much it's grown over the 4 years, on a compound basis, we get 34% annual growth there, which is fantastic. It's amazing. It's wonderful. And then we come down here and we say, well, what's the risk level? And I think you want to go moderate here. I don't think you want to go low because the possibility that lithium prices do moderate. You might even want to go high there, and I'll show you how it changes. So we go from 653 as a fair value to 711. So it knocks about 50 cents off that price target, just going from high to moderate. And what we're doing here is we're changing the discount rate that we discount those future earnings back to the current value at. Now, in terms of the PE method, you might want to use some of these different models here. So, for example, looking at what the brokers are saying on a forward basis, and if you stick with what the brokers are saying on the forward basis, it goes crazy. Don't worry about that so much. Right now, it is actually reflective of what the brokers are paying, to be fair. But I think we need to find an appropriate PE for a stock that's going to have this sort of growth. Okay, and I do think that 8 is far too low for that. I think we can go higher than that. I think, well, for 34% growth, I think 20 is actually very conservative. And if we go to the target PE there, it comes in, starts to look very cheap. So again, we're starting to see how polarizing Pilbara can be depending on your assumptions. Okay, if the brokers or the average or the median of the brokers are at 8.8, I'm saying 20's more than reasonable for this. Why don't we split the difference? And I'm just showing you numbers here. You can make your own decisions as what you think is a fair value. You get about 533, which is a little bit closer to fair value, but allowing a little bit of upside. Okay, so a bit of a skew there on the valuation and how to come up with a sensible number there based upon, not my assumptions, but your assumptions. I've given you a few options. Okay, let us continue to move to the request for today. I only did Pilbara because I know it's popular and it was the first one on screen. Sharon is asking about the S&P 500 in the USA, so let me head over to here, and I won't do any other indices. I think this will probably suffice. Are we in a bull market? Are we in a bear market? What's the most likely course of action from here? If you asked me 2 weeks ago, I would have said, well, that long-term downtrend is reasserting itself. Okay, we're probably going to come down and test into this big support zone here. How do I know there's a lot of support there? Because of these substantial lower shadows. Look at these lower shadows and white candles. This is where the money came in to buy the US index. Okay, and also filtered back into the Australian index. In fact, equities all around the world. So we shouldn't be surprised that as we pull back to that zone, this was the point where the buying started again. We're seeing it push back up. If we could define demand, it's down here. If we could define supply, it's probably somewhere in this zone, say between 42.03 and 43.26. We're closer now to the supply zone than the demand zone, so keep that in mind. What we'll be looking for in this zone to tell us that there is supply there, it's those black candles or the candles with the upper shadows we discussed for Pilbara. If we don't see those in there, if in fact we see a bunch more white candles, the supply is too scared. And I can see why supply might be scared right now. People who are looking to sell, to go more to cash or to short sell, to take advantage of a potential downturn in the markets, they are scared. They thought they had it in the bag yesterday with that big push down, and to be fair, completely failed for them, didn't it? And we've had 1, 2, 3, 4 full white candle days up. So the shorts will be nervous. I don't think there's a lot of nerves in the demand camp, to be honest. I think they're pretty confident. So let's see how we go in here. I cannot give you a definitive answer, because if you look at the overall trend, it is, to be fair, over the last 3 or 4 months, almost perfectly flat. The moving averages have been crossed over, and we've got crazy volatility. So I cannot say this is exactly what we're going to see, but what I can say is this is a key area of supply. If you don't see it, we're probably going higher. If you do see it, we'll probably come back down, and then that demand zone will come back into play. Okay, so unfortunately, given the state of the trends, I have to hedge my bets a little bit, but I am only calling it as I see it. This one is coming, that was for Sharon. This one's for Roberto. He's asking for Boss Energy. Now, I drew this many weeks ago when I put out sort of a Twitter coverage of the whole uranium sector, and I reckon Boss was probably down here when I did it. And lo and behold, Boss has found its way into that supply zone. And look, I don't think it's too frightened by the zone. Today's certainly a good day for it. Look at this. Look at this. I'm saying I don't think it's too frightened by the supply zone, but these candles are showing a bit of supply in here, isn't it? So look at this upper shadow. The only way you get this upper shadow here is if you have a white candle. This candle here, okay, so let me delete that for a sec. This candle here was a white candle at the start of the day, okay? This candle here actually, so it gapped up. It gapped up here, went up, and then came back down. So there was definitely demand in the system, both of these two trading sessions, but beaten down by the supply from this area, which we can see there is supply in here. It is clear as day. The fingerprints of supply are in this area. Today is encouraging in that we're kind of reversing the previous 2 days. We're kind of saying, okay, well, we're dealing with that supply. There's enough demand in the system. How do I know there's enough demand in the system? Well, there is demand in the system. How do I know there's enough? Well, after these 2 bearish days, we're actually starting to deal with it. We're getting this lower shadow. So now we're coming down and the demand's coming in to push back up, and we're getting a close towards the high of the candle. Now this one here is a live candle. Okay, so we have to take it with a pinch of salt. We won't know until at 4 o'clock this afternoon, Sydney time, when that candle closes, how good it is or how bad it is. So based upon the current update, we'll get another one in 5 minutes. It looks good to suggest that we're clearing some of that supply, which is so clearly evident in the system. If we can close here or above, here or anywhere better, hunky-dory, fantastic. The other reason why we might be having a little bit of supply here is the round number as well. Okay, so not unexpected to get it here. A good candle here will give me some confidence that we're dealing or have dealt with the supply, and we can actually push through to higher levels. So today is a crucial candle. Again, we'll get updates, see how it closes. If it closes as a black candle, if it closes as a candle that is consistent with the prior 2 candles, so this one here and this one here, then I think we need to start to get a little bit worried that the supply there's too much of a wall of supply here, and it is overwhelming potentially the demand that was coming back in. So critical level for Boss Energy. If I zoom out a little bit, get a little bit more perspective, look, overall, I can still go a hold. Even though there is a bit of supply in this area, because the short-term trend I do think is actually pretty good through here. I do like some of the candles that have popped in through here, particularly that one, and that one is pretty good. That one's excellent. Okay, I think we're moving back into higher peaks and higher troughs. The long-term trend is turning up. So I can 100% go a hold. I don't know if I'm going to buy in it right now just because of the potential problem that this area presents itself. But as the evidence grows that we're getting through that, then I would be swinging more towards the buy side, away from just the simply hold side. Okay. Now, Boss Energy, I will now remember to press that and press that. So everybody, all the folks in the recording and all the folks listening live can see this now. Good. And we'll go here. And I know I'm not going to have any earnings per share right now. So we're going to see probably a few of these numbers go N/A, but not available. And I won't be able to do a valuation. I know that for a fact. But I do want to show you that whilst we are not earning any money now, the expectation is if they get their honeymoon uranium mine up and running, it's a uranium stock if you didn't know, by maybe 2023 and certainly by 2024, we're going to get some earnings. And the earnings growth there actually could be quite explosive, okay, coming up. We do have 4 estimates, so obviously more estimates, more confidence in these estimates, but they're pretty positive, aren't they? 1 strong buy, 3 buys, no holds, no sells, and their price target is actually reasonably high there at 13.2%. If I was to be really cheeky, I might be able to squeeze out one there that we need to, and again, I don't like going into the future to do these, but I do have the ability to do it because my Wizbank spreadsheet is very clever. Moderate on the uranium price, or I'm just going to go high risk on the uranium price. Find the right target. Well, yeah, look, it's hard to say. It's hard to say because we're going so far out. What's the right target for earnings per share growth of that big? Not sure. I just don't think you're going to command much more of a target than even a 10 or 15 would be my view. So I'd almost go that. So I'm going to go target equals that, okay? And we still get that it's actually pretty cheap here based upon my assumptions, okay? My guesswork here. So I think BOSS looks very interesting, both from a technical and fundamental perspective. Let us go back to here and to here and do the next one, which is Elders. This one's from Damien, ELD. Oh, that's a very impressive move over the last few days out of what was a developing downtrend. So yeah, it was looking, to be fair, pretty bearish through here, but wonderful. Look at these amazing white candles. Even that's a very strong one with the lower shadow, that one and that one. So yeah, look, I'm certainly a hold here on the basis of that. I do expect, however, we might be prone to a little bit of a pullback, but it's the next move I want to see. So pretty happy with this one. Just let's see what the supply does, how the supply side regroups. So we're waiting now, waiting for the supply side, the people who have the stock. They had it at at 11.50. They were feeling pretty nervous about things because the stock had been going down very steadily from $15. People who got in at 11, maybe for whatever reason, they thought it was cheap, and now all of a sudden it's around 13. So let's see how they respond to respond to this demand side push. Okay, let's see how they respond, and for that I mean, and by that I mean the candles. So are we getting those black candles? Are we getting the candles with the upper shadows, for example? So the one that looks a bit more like this. And how big are they? How substantial are they? So let us just see what the response is, and then how far back they push the price, and then how the demand side responds. And I'll just draw you a little bit of potential price action here, which is how I think this is going to play out. And maybe, Damien, bring this up, I would say, in a week or two. So if we get something like this, and supply will come back in at some stage. Where is it going to come back in? Let's have a look. Well, this is a huge supply candle here. I mean, the supply there was immense. They may well be in the system to supply again, clearly up around here. So we're probably still a little bit of a ways away from there. So if we do get a candle like this, let us see how we respond. And then the key is a very shallow response and then a strong comeback on the demand side. So if you get something sort of around here, in and around this zone, okay, and you'll see the moving averages will start to tick up, and it'll be somewhere maybe at 13 with the white candles coming back in, and that would be the time, wholeheartedly, I could buy it. But now I can certainly get to a hold on it. Let us have a quick look at the fundamentals for Elders, ELD. We should have a bunch of brokers covering this one. In fact, we do. 11 brokers, so well covered. No strong buys, interesting. 6 buys, 4 holds, 2 sells. So quite polarizing again, being an agriculturally focused stock. But the price target is pretty positive. So 15.42, about 20% upside. Probably a few of those brokers haven't adjusted to the recent decline. I do need to make some adjustments here to get back to the right place. So we'll go here. I don't think this one would be high, but happy to go moderate. And the target PE for this one with negative earnings growth is disappointing. I don't think I'd want to go a whole lot higher than, say, a 13. Let's use the brokers. They're at 13.5. So, yeah, look, the reason why my model is so nasty to this one, saying that potentially it's still quite overvalued, especially after the last push. It's kind of saying that the last push was unjustified, isn't it? Because that's how much, well, from 11. So if I was at 9, a couple of bucks overvalued even then. But it just, yeah, this is my problem. So here, this lack of earnings growth going forward just doesn't get me excited, and it doesn't get my valuation model excited either. Okay, but hey, I'm not here to tell you what to do. I'm here to give you great information, hopefully that you can make your own decision upon. Let us go to the next one, which is from Barry saying hello. Jen on Woolworths. We've done a lot of drawing on this in the past. I think this one is looking pretty shaky. I think there is a little bit of a potential demand point in here. I do have my current update, so let's click that over the side. I would say that if we break beneath it, I'll give you a number here. So that level there, which is 35.63. So close beneath 35.63, 35.63. I would say that we are going to go a bit lower, potentially even to come down and test that June low, which was down around the 33s. So I'm not very happy about the short-term downtrend. I'm not happy that we have failed beneath the long-term trend zone, that we came up, we tested it, we failed again with some bearish candles and we're coming back down. And in a very good market, let's face it, this is the key to this. We've had a fantastic market over the last 4 trading sessions, and yet Woolworths looks like this. So I'm going to say I have a bit of a bearish bias towards Woolworths at this stage. Let's very quickly try and find the correct valuation for Woolworths, or at least give you what the brokers are saying. Well covered, not surprising there. 14 estimates, 3 strong buys, 5 buys, 4 holds, 3 sells. It's one of those polarizing companies. Again, pretty close to fair value based upon that. Let's go to here, make sure we've got the right FY start. The current PE is 28.94, which just feels high for me, even before I go and have a look at its earnings growth, which is 9%. Looks not bad. And for a company that's growing its earnings about 9%, I wouldn't feel uncomfortable paying, or if I was really conservative, I could go maybe 15 times earnings. If I was absolutely the most generous person in the world, I'm in a fit for a quality stock with a wonderful yield, I might go to 20, but even then that is a stretch for me. And even if I was generous and said this is a low risk stock, and it probably is low risk, look, it's pretty bulletproof, isn't it, Woolworths, with a target as low as so that's, yeah, as low as I could go would be 15. So it's looking like, what's going on here? Something's not right. PEG, target of 15, yeah, so it's getting mixed up. As high as I can go for the P, not as low. As high is giving it more credit, I guess. Then it's still overvalued for me. So Woolworths looks overvalued for me. A very high PE for the amount of growth in there. The yield is okay, but not excellent. Okay, and the only reason why you might pay such a high PE for the stock is potentially because it is so bulletproof, it's so defensive. Okay, so on the chart, it looks pretty bearish to me, and on the valuation, it looks as much as 20% overvalued, in my opinion. That's just my opinion. Let us keep moving. DEG for Roberto, which is to Grey Mining. And I'm going to go ditto on what I said for Elders. So we're really now looking for how supply responds. Right, we want a very shallow pullback from here. Okay, so if there is going to be a pullback, we want it to be as shallow as possible, and then we want to see some strong demand side candles coming in this zone here. Well, anywhere down to there, really, it could. That sort of long-term was resistance, now potentially demand zone. So I'm happy to go hold on this. It's not really a buy. I just think it's too early. Yeah, a few more things need to happen. But also, if you are on it, because I know many people are asking me these questions, not because they're thinking of buying, but because they're already there, just be careful. There's the supply zone. I'll probably even go supply band, really probably to there. So just understand your reward to risk as well. This is where, let's face it, a huge bunch of investors, right, made a very big mistake, okay, by buying in, okay? Am I just making this stuff up? How do you know I must be telling the truth? Well, if we look at those 3 peaks, I'm trying to get that text it, well, give it to me. 1, 2, 3 peaks. The number of investors getting dragged in here on these runs, which, let's face it, look very similar, don't they, to this run here. Dragged in. Think about all the people that got in here. How do they feel down here? Okay, and they want, beyond all wanting, to get out, hopefully at break even, and their break even zone is in here now. Okay, so we say that these old peaks, these previous points of supply, okay, POS, they do create future supply, latent supply. Okay, so be careful. And it's probably illustrative as well of what I mean by, let's see how the supply side responds. Let's see how they respond. So if we look at, say, this first time, we challenged the supply from this point of supply. How did we respond? Well, we looked good for, well, even this is not very, give me a lot of confidence with that shadow there. This day we kind of looked good, and then we got hit 2 days in a row, and then really the demand side just gave up, didn't they? And then look at this one here. This point of supply didn't even get up to this zone. It's a far feebler, if that's a word, showing from the demand side, a stronger showing from the supply side, and it was pretty much all over, 3 strikes you're out, wasn't it, really, for De Grey from there. So let us see how the supply side responds to the current price. But I think fairly instructive though. De Grey Mining, let's go here, and change that. Let's have a quick look. I'm not sure if these guys are making any money. This will tell me, and we can see that we not only do we not have a lot of coverage, but no, they're not making money, and therefore my valuation spreadsheet cannot give you a valuation. Okay, let us keep moving as I get better at clicking the right buttons to get us back to where we need to go. Let's go for King, coincidentally, asking for DEG as well. Seems to have bounced on broker upgrades and releasing their pre-feasibility study. Okay, well, that explains some of the positivity towards the stock. I haven't read that PFS for either of you gentlemen. I might even go have a look at it, but at least we can see from the chart how to play that one. Let us go next for Ron with DMP, which is Domino's, and it's looking pretty dire for Domino's, isn't it? Now, I mean, we've seen some rallies, haven't we, over the last 4 candles on Elders, on De Grey, and we've certainly seen a little bit here on Domino's, but this is probably, let's face it, this is probably more to do with the fact that everything else went up, the whole market went up, rather than just people just targeting Domino's specifically. At the same time, look, to give it credit, there's a rally there. I'm not very enthusiastic about this. I don't think it's the time. I don't think this is the smoking gun that tells you that Domino's is so cheap now it's time to get in. I don't think this is it. Let us see again. I know I'm a broken record, but we've had these rallies, haven't we, on many stocks. Let's see now what happens. Let's see if we get a shallow pullback, bunch of white candles coming in, and what we're actually going to do, if you think about what that will create in the price action is, so we're doing this, right? And we don't know how high it will go before it starts to pull back, but we get a shallow pullback and then we start to push back up. We get some nice candles and we're making higher peaks and higher troughs again. And even if we do all this, you've got to think then, well, we might be doing it at 70, and then can I even if I got that, could I buy it? Well, I've got this huge weight hanging over its head, and I've got this supply zone hanging over its head, and it all feels a little bit ho-hum for me. So I think if you're really trying to pick the bottom on Domino's, hey, good luck to you, knock yourself out. But for me, it's got to do so much, and it could be weeks and probably months until we get something which resembles, the price action we need to say that we're pulling out of this downtrend. And here's the thing, the problem for a lot of people is they'll say, Carl, if I wait for all of that price action you want to see, so high peaks, high troughs, nice candles, taking out that long-term downtrend zone, which is hanging over the price, I might only buy it when it gets above 80. Okay, why wouldn't I just buy it now in the mid-60s? Surely this is a better place to buy it. And I say, well, yes, absolutely. If it got to 81 and I was saying, well, now it's in the clear and you bought it at 65, well, clever you, okay? But we don't know the future. All we can say is based upon the probabilities from the demand and supply we can see, and this is not us making this demand and supply because we're too little. We're insignificant little piss ants in the scheme of things when it comes to the market. The big money is making these charts, right? And I would put to you that the big money is sitting heavily on the supply side and is fumbling on the demand side to cope with that supply. So, smarty pants, if it got to 80 and I said, look, it's in the clear and you got in 65, good for you. But the balance of probability suggests to me, right, that if anything, what we should expect from Domino's is in the medium to longer run, not this price action up here, but probably, I mean, is it plausible that we see something like this? I mean, you tell me what is more likely given your experience of these charts. Okay, and if we have to put scenarios on it, let's say that is scenario A, let's say going sideways and doing nothing, which is a very real possibility for Domino's, is scenario B, and then scenario C is the turning up case, and us regretting that we didn't buy it at 65. Okay, so I'm just painting scenarios here. You tell me what you think is the most likely one of those three. I'm curious to see what the valuation on Domino's Pizza is, because most people out there would assume, oh, look, it must be cheap. You know, it was, what was it? It was, and I know the recording people can still see the chart going back. It was $165 a share, and now it's only $65 a share. So therefore, $100 cheaper, $100 less in price means it must be cheaper. Okay, well, let's investigate. Let's answer that question. So we can see that the brokers, there are 14, so great coverage, and therefore we can have a lot of confidence in our forecast data going forward, because what this spreadsheet is doing is taking the averages of all of these 14 very, very clever groups of individuals who are analysing these companies day in, day out. 2 are at a strong buy, 5 are at a buy, 5 at a hold, and then there are 2 at a sell. So whatever you think about Domino's, how cheap you might think it is, there are 2 brokers out there that think it is a sell. The price target is 81.34, which is allowing 28% upside. But really, for me, only because these brokers are so stubborn to bring down their target prices, really to admit that they got it wrong, and their real valuation is probably less than that. Let's investigate their real valuation. Well, we do have some great earnings growth. Okay, so compound annual growth over the look forward period of about 17%, which is excellent. And I could certainly pay 20. I could pay 20 every day of the week. Remember, for Woolworths 9%, I was saying, maybe I could concede and pay 20. This I could pay 20 every day of the week. I could probably pay a little bit more, given I do think there is a lot of quality in Domino's. Low risk, high risk. Look, I'll let you split the hairs on that one. Let us make sure we've got everything else right here. And it's still coming out a little bit overvalued. And the reason for that is it's not exactly bargain basement prices for Domino's in terms of what you're paying for the earnings. So, you get last year was about 30, and it actually went up this year. Okay, it actually went up this year. Their PE ratio went up, not down, because their earnings came down. They've cycled that COVID bump. And whilst the earnings are going to improve, you're still paying a pretty penny for those earnings. So the model is saying it's look, yes, it's quality, but it's not exactly cheap. And potentially these 2 brokers are using a number in there very similar to mine, and therefore going, well, 13% downside, granted that there is a yield of about 3%, this thing looks like a sell to me, and that's stimulating them. But there are other brokers out there. Now here, let me illustrate this, and this is how important it is to get your target PE right, but it also illustrates just how tricky fundamental analysis is, because I didn't have to come up with these numbers. I'm using the broker's numbers, but then we have to use the right assumptions to get this right. So if I go to more what the brokers are thinking, so we're using the median of their forecasts, which is 23.3, we actually get about a fair value for Domino's. Now, if we go for more of a historical measure, okay, so we go to the Domino's old PEs. Okay, so that's back here in the past. We know that it commanded a much higher PE in the past, and therefore the target becomes 103.62, which is more in kin with maybe some of those historical values. But I don't like using the historical values. I rarely use them. I put them in there just so I can see them. Dynamic would use everything, and therefore it's actually looking a little bit cheap. I tend to gravitate between using what the brokers are using going forward and then my own view of what I'd be prepared to pay for the earnings growth in the system. So let us say that Domino's is about fair value, okay? The chart is not looking fantastic, and hopefully for people out there who are maybe watching me for the first time are starting to understand why I would look at a chart like this and not say that it's a screaming bargain, because I think the natural instinct for people that don't read charts is they go, Domino's has to be cheap. And that's your thin veneer of analysis, your back of the envelope analysis based upon the price it used to be. Well, there's a whole industry out there. I just showed you a whole industry out there that are doing fantastic analysis to suggest, based upon what it's going to do in the future, not what it's done in the past, it's actually not that cheap. Okay. Let us keep moving. CXL is the next one. Thank you for that one, Ron. I think it was quite illustrative. And that's what we're trying to do here in Ask the Experts. Yes, we're trying to look at your portfolio, but we're trying to give you an idea of how the market works and how to become a better investor. Calix Limited, I think it looks pretty good. And that's probably about as good as I'm going to get on my comment there, or my summary comment. I don't mind the short-term trend. I don't mind the long-term trend. The price action is okay. I love this candle here, and I love the fact that the supply side didn't have a lot to say about it. Okay, so I'm pretty happy with that. If I had to give this a score out of 10 in terms of purely technicals, okay, I think I'm pretty close to giving it about where it is on its price, about a 7 out of 10. Don't think I can go much higher than that, because I do note a bunch of black candles that seem to be just peskily nagging away at this one. So even when it goes up, sometimes it kind of goes down. That worries me a little bit. I do think the price action could be better, and we are seeing a bit of supply coming in around this little area here, no surprise. And then we're going to have problems, aren't we? Even on the way up, we could have some problems, and pretty big problem up there. So look, I can certainly get to hold on this. I'm not sure if it's exciting enough in those technicals for me to get to a buy just yet. Let's have a quick look at the Calix valuation, CLX. There we go. I'm not sure if we're going to get anything. I need to remember to click back here for the recording. For the people listening to the recording, sorry, it's a bit clunky today. New system, I'm getting the hang of it. We don't have anything, okay? Nothing. So let's keep moving. The next one is going to be CTM for Doug, which is Centaurus. Similar to Calix, isn't it? Very similar to Calix. A little bit better in that yes, there were black candles, so actually almost identical, isn't it? Yeah, pesky black candles. But actually, we've kind of reached this little inflection point here where the candles are starting to flick back to white. And that speaks to me of accumulation in the system. You know, certainly on the way up, it was more 50-50, but at least we did have a few more black candles. So I think maybe whoever was peskily sitting on this, I think maybe they're out of the market. I think that big supply overhang is possibly gone, and demand is coming back in. Not a lot in the volume to suggest there's a huge amount of enthusiasm here, but enough for me to, again, go a solid hold on this one. I think there's enough in it in the short-term trend and the long-term trend that's re-establishing. I will point out some potential supply here and then some major supply around here to deal with, but I think a very solid hold on Centaurus. Let's have a quick look and see if we do have any fundamentals on this one. I'm going to guess we don't, but we do. Not earning any money over the look forward period, so therefore I can't get a valuation on that one for you, Doug. Chris is asking for a look at Whitehaven Coal. So let's go WHC here. And we have been waiting, haven't we? We've been waiting for a long time to see if we are seeing those fingerprints of supply in the market. Anything to be concerned about, and therefore to lock in profits. We have prior to today talked about the compulsion, is that the right word? You are compelled to exit at least some at the $10 round number. Look, unfortunately we haven't got there. Are these two candles, I know what you're all thinking, are these two candles enough of a response from the supply side, a lack of confidence from the demand side, a growing lack of confidence from the demand side to tell us that it is time to, and this is what we've been waiting to do for such a long time, manage exits on Whitehaven Coal. They're not ideal, are they? They're not ideal, but I'm going to give it the benefit of the doubt. And if you don't have the guts to stick with it, that's okay. Okay, you're probably doing pretty well on it. And there is some supply there. We can see it. If you want to be jittery and knock some out, that's up to you. But my official word is that the supply we are seeing is not sufficient yet to tell me there's enough supply to warrant getting out. I think I'm going to give it the benefit of the doubt. I don't think I know. And on the basis of the strong short-term uptrend, the magic long-term uptrend, and the fact that the demand zone here has not been breached, Okay, and this is what I'm looking at. I'm looking at this, the demand's here. So as long as we continue to hold and print nice candles above that, I think continue with it. Okay. What sort of candles do we want to see in and around that zone? I've drawn them for you today already. So we are looking at the white candle there, or potentially that one there, and I will fix them up in a second. Don't worry if they look a little bit skew. If that one is going to continue to look a bit skew, I can do that. And we go fill white. There we go. Oh, that just got worse, didn't it? We go white here. So that is the sort of candles we're looking at in this zone. So we want to see how the demand side responds to the supply. Okay, we've talked about that today, haven't we? How does the supply side respond to demand? How does the demand side respond to supply? Say those two phrases just over and over in your head as you're looking at charts. You've just had a huge run up in demand. How does the supply side respond? How does the demand side respond? Do they keep demanding in the face of supply that might come in? When there's a pullback, how does the demand side respond? Do they come back in with gusto and continue to buy in the face of that supply, or do they run away? And that's when you need to be worried. I'm going to stick with it. That's my official word for you, Chris. And I won't do the valuation on Whitehaven because I'm pretty sure we've done it every week for the last 3 weeks. So maybe let's just keep moving in that regard. EM2 is the next one. Which is not that one, that's EM1. Let me try again. Let's go EM2. There we go. I need to get back to my default zoom. It's important to do that each time you look at your next chart, so you don't forget to see the bigger picture if you've zoomed in, or you don't get to see the detail if you've zoomed out for whatever reason. Okay. It's having a rally in line with the rest of the market. I think this is for a different Chris, coincidentally. I think, Chris, you know what I'm going to say about this. Look, that's interesting. There's some interesting things going on here, but not enough to compel me to buy. I still think there's so much more that needs to happen. And what needs to happen? Well, there's a little demand. Let's see how the supply side responds. Let's see it move back into high peaks and troughs. Let's see it challenge that long-term trend zone. Let's see it get above it. Let's see a short-term uptrend establish itself. It's not one of those turnaround plays. Remember, when we talk about these turnaround plays, it's just not compelling for me just yet. Okay, and they are super risky at the best of times anyway, because you are challenging the established trend, the established downtrend, the overwhelming supply of the market. You're challenging that, and I don't think there's enough in this for me to want to do that. If anything, you know how I work. If I draw these scenarios, if I go, well, that's A, I know I'm mixing them up a bit, my letters, and down the bottom here, let's go here. Bear with me 1 second because I need to change that, and we get to C. And we say, well, which is the most likely scenario? It's probably A, isn't it? Bumming around sideways for a while. And if that's the case, why don't we find something that is likely to more likely to go up now than not? I won't look at the evaluation for Eagle Mountain because I'm expecting, given the chart, and I hadn't heard of it until you told me about it just then, Chris, that we won't have any earnings or even broker coverage for me to get a valuation on. For this one is for Sharon. We're going to go for coals here, and I suspect it's very similar to Woolworths, Sharon. So I'm just going to go ditto on Woolworths and say that, because the chart is identical, let's face it, if you're just looking at the chart, you would say balance of probability lies to further declines, potentially to test a demand point here. And failing that demand point, it could certainly come into those 16. So not a compelling chart at all. If I was to look at the coal's valuation, I suspect it will be similar to Woolies in that it's probably a little bit overvalued right now. So we do have 14 brokers covering, huge coverage, 3 strong buys, 3 buys, 7 holds, 2 sells, another polarizing company. The price target is higher than where it is, but might be to do with the fact the price has declined and brokers just haven't updated. I'm happy to go low risk on this one. Well, if anything, what a great tool for you, isn't it? And for the viewers who are now catching up to me, sorry again, to see how Woolworths and Coles compares. I'm sure a bunch of people wanted to know that. Lower compound annual growth rate. Remember, we had 9% for Woolies over the look forward period. We also went for low risk there, and we noted that the Woolies PE was about 28, if I'm not mistaken. And here we're at 22, so straight away we're better in that regard. And 7%. Look, again, being the most generous person in the world, I could go 20, and let's just price it like for like. let's go like for like. Okay, like for like with Woolworths, and only because we're using 20 here and not something more appropriate, you would say that on that basis, like for like, Coles is substantially better value than Woolworths and also has a better yield. But both of the charts are lousy. In reality, I would not pay more than 15 times for that sort of growth. And even then, that's me being a little bit generous because they're very defensive companies. So I would put to you that if using my preferred valuations, both of those supermarkets appear extremely expensive to me. That's just my opinion. Okay, let us keep moving. And Sayona, hoping this one was looking really good. Yes, it has had a nice pop, which is wonderful. The only problem now for you, Kamal, is that we are, and I know you know what I'm going to say. I know you know it. I know you know I'm going to say I'm going to draw it. Oh, I reckon there it is. And the reason why I'm drawing there is I'm looking at, say, this candle here. We're in the supply zone now. So look, the easy part is over, and now it gets hard. It doesn't mean you rush out and you sell. Having said that, some people are. Look, some people are already selling, Kamal. They're not waiting for you. They're already getting out. Why? Because they got in here. And I tell you what, Kamal, maybe you got in here as well. And Kamal, how did you feel? How did you feel down here, Kamal? You felt pretty awful, didn't you? And you got in at 35 and you said, please, God, whoever your God is, I'm not here to say who it is, Kamal, but whoever it is, please, Maker, please, if you just let Sayona Mining go back to 35 cents so I can break even, I promise I'll get out at break even and I'll never trade again. Please, just let that happen. And lo and behold, your Maker has responded, and it's giving you that price. And not everybody's going to feel like this, but some people will, and that is why they are getting out today. Okay, they are undoing their mistake. It's taken them the better part of 6 months to undo that mistake, and they're pretty happy that they're breaking even. Now, here's the thing, okay? That's just them. What if this is the real deal? What if this company is not going to stop here and it's going to $1? I know I'm getting you excited now, Kamal, because that's where you want to see it go. Quite possibly it could. I'm not here to say it's not. I tell you what, this zone here, where there are people who are now getting out, it won't stay a supply zone, because when we get to here, okay, think about this, when we get to, say, 50 cents, all the people who chickened out here, guess what they're saying now? They're going, I knew this was the one. I knew this was the one that was going to go up. I always get out too early. Why didn't I just hang on? And you can guarantee all the people who got out here are now thinking it's time to buy back in. I've got to get back in. Is this going to $1? I need to be there. And it turns out that this old supply zone down the track, down here somewhere, will tend to act as a demand zone going forward. Until we get to there, I don't think I can be super positive on Sayona, as in, when I say super positive, as in getting you to a buy today. I don't think down the track, punch through the supply. It's a finite amount of supply here. It's not unlimited, but we need the demand to get through whatever's there. If the demand can do that, it'll change the whole psychology for Sayona, and it may well actually be then able to push to much higher levels. So a solid hold, not a buy. Major coincidence today, we've had different people asking for the same stock in two questions, consecutive questions. So Jill's asked for Sayona, I've done that one, and going for the lithium double here in Lake. I don't think it looks as good as the rest of the lithium sector. Pilbara is just amazing. Allkem, it still looks amazing. Even you look at this, we talked about Whitehaven and the candle on Whitehaven, how it wasn't sufficient, in my opinion, to warrant you chickening out. Just like, and this is, I couldn't have asked for a better example, why this candle here is not sufficient to cause you to chicken out as well. It's still a hold for me, even on that black candle. And look at today actually showing, that you can still hang on to it. I do think you are going to have to manage your exit at some stage. Why? Because it's going vertical. It'll pull back. You've got another opportunity to get back in. But I think for now, Allkem, absolutely 100% is a hold based upon that chart. I've talked about Pilbara. I think that's a hold. I'm going to go through the ones off the top of my head. Liontown, I'm going to put in the lake resources category, is disappointing. Sayona's done well. We've seen some of them move, some of them miss out. Let's look at the diversifieds here. So IGO, which is really it's a nickel company, let's face it, that has some amazing lithium assets, actually done very well to my surprise, but coming into a key supply zone. You can see here, not only with that run number at 15, but we're going to have supply here. So that is probably more of a, just be really cautious here. Watch out for the fingerprints of supply, and maybe you might be compelled, therefore, to take some profits. And the other one is mineral resources. So let's have a look at that one here. It's a bit of a lithium, ASX lithium sector review. There's a dividend in there as well to boot, which I think is around here. So even more amazing is this rally that it's had. I can't see, I was going to say I can't see any reason to sell it. Look, there's a couple of shadows in here, isn't it? There's a couple of shadows. I think you can, look, certainly if this candle gets worse and it starts to be a black body or just pull back, I think you would maybe just knock out a little bit on that one. Okay, otherwise I can go hold on that. Am I missing any lithium companies? CXO, how dare I? Well, this is probably the pick of the bunch. This is doing a lot of the stuff I've talked about in terms of what you need to do at the supply zone. So we talked about Sayona, didn't we? And that was for Kamal and Jill. Now, well, I love RCX, but sometimes when it comes together like this. So we talked about supply, and then we talked about dealing with supply. Didn't deal with it well there. Look at this horrible black candle here, okay? But then we get another go, white candle, we push in, having a little bit of uncertainty, but today's candle is fantastic. Today's candle is telling you that we have taken out that supply. Because you've got to think, if I sort of give you a visual picture interpretation. So that supply zone might have started that big, okay? So let us say that, okay, let's go point A, the supply zone is that big, okay? Then we get to point B, right? And we interact with that supply zone. And we by definition, remove some of that supply. How much did we remove? Let's have a look at the volume. The volume would tell us if we removed a lot of supply, a little bit of supply, actually quite a bit. We removed quite a bit of supply. Volume is buying and selling. So I know there was buying early in the session on this candle here. I know there was buying here, but I know there was lots of selling as well. That's good news. The selling is good news because what it does at point B is it changes the dynamics of the size of that supply zone. And then we get here and we actually start to move back into it with a good candle there, a little bit of a volume influx as well. But actually lower volume this side is not a bad thing because there's actually just less supply, okay? Day there, just working in and around this zone, and each time removing some of that supply. To today, if we close up here, I'm going to put to you, that's our scenario, okay, at point C. Our scenario at point C is that's not a supply zone anymore. If we close above this high, that's not supply. If anything, as I discussed in the prior example, it could well start to act as demand. Okay, this is my pick of the lithium sector. I know that's the kiss of death sometimes, and a few people will be nodding their heads in agreement, but based upon what I can see in the charts, that looks like the best of that bunch. Let us have a look at CXO, see if we can marry together the fundamentals and the technicals. Not a lot of coverage, so not a lot of confidence we can probably put in these numbers. Funnily enough, 2 estimates, but with 3 recommendations, 1 strong buy, 1 buy, 1 hold. At least there are no sells. Price target's roughly where it is, to be fair. We are going to see some earnings growth going forward. And look, I'm not even going to bother to try and value this because when we go from 2 cents to 20 cents, my model is going to say, well, that's about 1,000 times earnings growth, and therefore your price target is about $1 million. So probably not going to work out for me. We're very, very close on time. So what I'm going to do now is say, please stop putting any more in. I'll go down the bottom, and DRE is the last one. I won't do any more fundamental valuations, simply we won't have time. I'll whiz through the rest of these very quickly, charts only, and give you a very simple buy, hold, and sell. The next one is from Eastern, who's asking for EVS, which is not doing enough for me yet, Eastern. I know last time we looked at it, we probably said, look, it's okay. I might have given it a 5.5 out of 10 or something like that. It's probably more of a 4 out of 10 now because it's struggling at this zone here. It just doesn't look like the market is so excited about this one that they're falling over themselves to get in. So, as I said, promised buy, hold, or sell on this one. My hold, which is what I'm going to go with, is becoming more and more tenuous because those trends at the end look like they're about to turn down. But yes, there's probably a bit of demand in this zone as well. It's proven itself here before. So maybe I can just get to a hold on that one. Let's look at the next one for Sharon, which is Westpac, and super fast on this one. You can see demand zone here, supply zone there, stuck in the middle, And I would suggest to you that unless you're the self-managed super fund holder who's going to hold it forever, you don't care what I have to say anyway, it's not one you'd be looking to buy right now based upon the technicals. It's not telling me that the market is falling over itself to buy this one and at the same time not to sell it. Let us look at the next one, which is IEL, which is, I think, a solid hold. It looks similar to a couple where I can't even remember them now, but we had this sort of setup here where the short-term trend was in place and the long-term trend was starting to establish, but we had a bunch of pesky black candles. This is probably more of a 5 or 6 out of 10. It's not lighting the world up. However, there is hope, and I think if we can see, well, certainly a close above this zone. Okay, so certainly a close above here, we're going to be in business. But even a close above here, I would think would be positive. So in the right market, I do think this one can do well. And let me give you a number here. So about 28.70 or above on a closing basis, it's going to start to look interesting. And then a 30.37 or above on a closing basis is going to look, I would say, very, very good. Okay, we start to be notching up my scale of 1 to 10. Let's go to, I won't do Liontown because I've done it, but if you're unsure, I did say something like it was disappointing. For me, I did think it was one of the better looking like CoreLithium charts out there. It hasn't done what I would have liked. I still think it's a hold though. I don't think you need to be too concerned about it. This is the supply zone. You know how to read charts now. I don't need to tell you. And until then, I don't think you need to really panic. Also, there's a round number up there, so just be a little bit careful. Let us go to MEK for Andrew. Andrew, I haven't heard from you for a little while. Okay, look, here's your little supply event here, isn't it? That big black candle where it pretty much look, this was a big candle and then this was a bigger candle, if you get what get my drift. So this is your supply zone. For me, this is your compulsory partial exit. Then these two here would probably warrant dishing out another third, and I think you're still holding on the last third with your final level down here. So if it closes beneath that level there, then I think you would be compelled to go minus 1/3. I'm just assuming you have it here, Andrew. If you don't have it, I don't think it's a buy just on the basis of the strength of this candle just yet. And because the supply here was so pronounced and convincing, I don't think it's one of those I want to muck around with until we do something like this and we deal with that supply more convincingly. Okay, so I can go hold for a final patch. But not a buy at this stage. If it's getting loud, it's because the weather is pretty bad outside. Michael's asking for the gold chart, which I can do very quickly. That's the reason why I'm going to do it now, because I think it looks very average. You know, Michael, if you've listened to me for any amount of time, I'm not a gold bug. I'm the opposite. I think gold is completely useless unless you want shiny around your neck, your finger, or wherever you prefer to put it, Michael. That's up to you. I'm not here to judge. Now, the trends are down, very well established, and interest rates are up, and gold doesn't have a yield. I cannot see a reason to own gold as a financial asset. Okay, it doesn't make any sense to me. It costs you money to store it. And but the gold bugs will tell me otherwise. Gold bugs, I know I'm going to have all sorts of comments in the bottom. In the bottom of this, there's a message coming through from a gold bug right now telling me to shut up and grow a brain. But I put that back to you, gold bugs. Okay, the US dollar index. And I'm guessing these questions are linked, because if the US dollar index can come down, then by default the gold price might go up. That still looks pretty strong to me. I don't think there's anything too sinister in there. It could probably stay higher for longer, and if the whole world comes to an end in Europe and China, then that's probably going to be strong anyway. Red Dirt Metals for Algis RDM. I can't get it from this watch list. I need to go back here. RDM. That's a big no from me, unfortunately. Algis, it just looks so convincingly skewed to the downside, as in the people who own this stock, they're not very keen on owning it. They want to get out. And the people who don't own this stock, that have cash, that are assessing all their alternatives, all these amazing alternatives. And we looked at a bunch of them today that they could buy. They're not buying. They're not buying this one. They're going and buying all those other things. So please become a disciple of demand and supply and the balance thereof, and stop owning these sorts of horrible looking trends. Okay, let us keep moving to a coal sector review for Jane. What time is it? Let's have a look at Newcastle Coal. Is hanging up there, Jane. It's fine. Nothing in there to suggest to me that this bull run in coal is over. It's had a few down days, but I still think it's rock solid. If you're into the coking coal variety, that doesn't look anywhere near as good. That is a growth-oriented commodity, and I'm still not a believer in the growth story going forward. But I am a believer in the keep warm story. I know not related to coal stocks, but certainly related to the story, Jane, is the thermal gas. The natural gas price in Europe has been pulling back. That's maybe hurting this energy picture, energy stocks over here. But natural gas prices have pulled back, actually rallied the last couple of days. My gut feel, and it is nothing more than a gut feel, Jane, is that there is still one more almighty big push up as people, our cousins over there in Europe, they start to shiver, start to do this and start to turn the lights on, and there are power on, and there are brownouts and blackouts and shortages, and that could be that final big push for our energy sector to get out. But I do think you want to take advantage of that and sell all your energy stocks and not hold a single share after that, because we're probably going to see a major downturn ex post. Crude oil price is in a downtrend, but that's more of a growth oriented. Now, let's do the quick coal review here with that in mind. And Jane has asked for New Hope Corporation, which still looks good. I know we're not looking at candlesticks here, but sometimes, it takes out a lot of noise, still very strong. Not even experiencing that Whitehaven supply candle that's come in there. We've talked about that one at length. Terracom, I still think looks amazing. What a wonderful looking chart. I can't see any reasons to get out. That's not the best candle there, but, it's still okay. Happy with that one. And then the fourth one in that thermal coal list is Yancoal, which looks like a solid hold to me. There's a bunch of dividends that have been paid in those charts as well, so they're even stronger than you think. Wisetech is an absolute hold. I can't see any reason to sell it. Sometimes I say these things too quickly, and then I actually look at that candle there. Is not great, is it? Is it happening at a key supply zone? It's happening above the supply zone. I think we've dealt with the supply. Look, I'm going to go hold. If you bought some here, smarty pants, and you wanted to sell a third here, no complaints from me. But otherwise, I do think you back this, and you back this, and you back the quality of the stock, and you hang on. Okay. Given the technical difficulties and the stuff ups today, I'm going to cut my losses. How about that? For a great trading advice is to cut your losses when it's not going well for you. Catch me next week if you are watching the recording. Hey, come and tune in live. Promise it won't be a dog's breakfast like it was today. I'll find out all those kinks. If you are thinking of investing, get involved with Think Markets. If you're looking to trade shares, we can do that. Over 3,100 shares and ETFs, $8 flat rate. HIN and CHESS sponsored. Very important you do that. You're not aggregated with a bunch of other investors. If you're looking to trade CFDs, so things like natural gas, you can trade that. Crude oil, you can trade that. Wheat, the ASX 200, the S&P 500, you can trade those with a CFD. So rather than trying to pick individual stocks, you can trade a whole index. Or if you think natural gas is going up, there's no point buying Woodside. Let me tell you, just go buy natural gas. Let me say that to you again. If you think natural gas is going up, don't buy Woodside, because Woodside's got a bunch of other stuff going on. Just buy natural gas. If you don't know what a CFD is, learn about it. And we're the best place to do it. Of course, award-winning broker. That's a big tick. Easy to use, multi-asset platform. You can have your self-managed super fund over here on one side doing its thing while you're trading natural gas on your CFD account, all part of the same platform. World-class trading applications, dedicated account manager with 24/7 customer support. And of course, you get my analysis. Head to www.thinkmarkets.com/au for more details. If you're watching me on YouTube, if you're still watching, if you got to this point, congratulations. Hit the subscribe button to stay notified of any future updates, and hit the like button to let me know you like what I'm doing so I continue to do more of it. Apart from that, apologies for all the stuff ups today. I will get better at the new software. All the best for your trading until we catch up again. Bye-bye for now.